Good evening. This is Ifan from the Black Room, and I wanted to continue a discussion that we had yesterday in a video about the basic components of a trade, the structure that you'll see in each and every trade that's called in the Black Room. And while it was maybe more negative than I intended it to be, talking about how trading is a difficult activity, is a difficult skill, and requires us to have a certain respect for it. I just wanted to talk about why those components are necessary and kind of what happens when you're missing any one of those components. Okay, so I wanted to start with this EXPD today that was gapping down. I considered this a pretty bearish gap. Okay, so I wanted to look for an entry short at the open. Okay, now we see in hindsight this got bought. Some people felt like this was a good buying opportunity. We were getting it on a discount. That's what traders decided. Okay, as we see from the follow through that it got after the gap. Okay, but in the morning, from this opening price, seeing that it was damaging this uptrend, I wanted to see this go lower and maybe bring us closer to somewhere around 68. Okay, I thought there were big targets if this started to move. Okay, I was wrong. But that brings us to our first point here, which is that the importance of an entry. Okay, so we'll look at this EXPD this morning right off the bat. Okay, now if you had that conviction, and maybe you didn't, maybe you don't look at that gap and think that it's all that great or all that powerful, but if you did, and you were to say, well, I'll just get it as soon as the open, I don't have an entry, I don't have a pattern of any kind, I'm just going to go off of, or maybe you thought, the news was really bearish, something like that. Okay, and you get in it here. Well, it opens here and you can see that it moved, right, over $3 right off the bat. That's not a kind of move I want to see go against me, right? So timing is important, not only because you need a stop, and we'll get into that a little bit, but first I just want to talk a little bit about the entry. Okay, so let's look at where I got this call from in the morning. Okay, so this, as you can see, was called 6:43 my time. It's going to be 9:43 market time, East Coast time. Okay, 670 by 70.50. Okay, called right here. So what was going on? Initially tried to move up again after this big topping tail, put in a lower high, and came into new lows. Started to base, and then tried to break out from the base, and immediately came right back down into the lows. So I put in the call. Okay, right there. That's when the call came in. Now we know if it makes new lows, right, and these are the numbers outlined for you here, 69, 70, 70, 70, 50, yeah, my actual stop would be at 70.51. Unless it traded a little bit more spare than that, I'd probably give it even a few more cents. Never triggered, right? That's the importance of the entry there. It's not just so that you don't get sucked in and I'm not part of this volatility and wildness going on here, right? What happened here, a bearish move, an attempt to move higher, and now I know there is support at this 69.70. Okay, right? I treasure my capital, and I want there to be a pattern, something to happen there that convinces me to making a commitment to it, right? And so this showing of support, now that break of support, now I want to be in it short, right? I have my risk defined. Now, of course, as you can see, ended up going higher. Fine, no harm, no foul. My entry, having an entry, okay, keeps me from getting involved in this move, which in the end, right, ended up moving higher. Okay, so the importance of the entry there. Okay, timing is important. I think for all of us traders, I think we can all agree on that. Okay, so you'll see this a lot too in the room. It's not going to be all home runs and stop outs, right? There's going to be plenty of trades get called, and if it takes out the stop first, right, it's just procedure. Trade is canceled. Maybe we can find a new stop or adjust the numbers if it sets up another pattern. In this case, the pattern was invalidated. Okay, so it's just canceled. All right, that's why we have the entry. Okay, and then after that I was doing some scanning, trying to see what else we had, and this REGI came up. Unfortunately, the REGI was not on our morning scaps list and came up a little bit later on a scan. Alright, so let's go to the 1 minute here on this REGI. Okay, and I'll go ahead and clean this up, show you what the daily looked like as well. Okay, clearing some resistance, also a gap. It is coming from a few bars up. That was probably the only thing I didn't like about it, but this is more professional than novice. Clearing resistance. If this had been like wider green bars and already broke this resistance and then was gapping up, okay, then I'd start to have more of a bearish bias. But because this resistance had held, we have a break of that. I'm bullish on this gap. Okay, I think most people that play retracements would be pretty interested in this retracement. To me, I thought this was just a really, really nice looking pattern. Just yeah, just as pretty as can be. It was on the pilot program, so sometimes they do set up in a way that well defined in these 5-cent increments. Okay, but because it wasn't on the morning list, it wasn't already on my radar, and it came up, I found it later. The call ended up being a little bit late. Not late in that I called it after it triggered, but late in that if we were to play this, if I had found this earlier, then I would have played it over 2050. Okay, instead, because you can see the call came in at 256 or 656 and triggered at 657. Okay, so this is when the call came in right here. Here, I'll go to the 1 minute so you can see. Basically, only a 1 minute difference between when I got the call and when when it triggered. Okay, so this is when the call came in, and 656, and then 657 triggered immediately. Okay, so now this kind of brings another question, still pertaining to entries. What if you find a really good pattern just like this and it's already triggered and it's already starting to go? How do I know if it's too late? How do I know if it's already gone? Okay, the important question to ask in that situation, right? Most people will just say, "Oh, I just never chase." Never chase, that's just right. That's common knowledge. But I think the right question is there still room to target? If there's still room to your theoretical target, then it's okay to play. Okay, in this case, right, it triggered over 50, you'd get filled 55, and in this case, right, we're getting it 10-15 cents late, but how much room is there to target? In our target, we are looking for high of the day. Okay, just retest the highs and we'll take some, and then beyond would be great if it continues to go, but for now, target 1 is high of the day, right, and then target 2, we'll see if we can get a nice break, how it sets up after that, and then we'll look to manage after that. Okay, so this, we got the entry, and what you'll see a lot of times when you get a good entry, right, when you get a nice entry, and you have a nice pattern preceding, especially if it's like this consolidation pattern, is that you get a nice fluid move. I apologize, it keeps scaling back. You get a nice fluid move. Okay, so this, when you get in here and it starts to go, there's almost no potential for you to mess it up, right? Even if you immediately think, I want to trail break even or something, you almost can't even mess it up or get out too early. Okay, now as we moved up to the highs, okay, we got close to the highs, right, up over an R here as it got to 21.28. We got this wide range red bar. What does this wide range red bar tell me? Is that there is, right, so when we're here and we're going and then we see this reaction, what does that tell me? There's some sellers here. There's some people who consider this price a good place to sell, either take profit, short, whatever the case may be, right? So what does that mean? Sellers mean resistance. If there is more supply than demand in this area, it means resistance, right? Simply. So in response to that, once we got that, I said, all right, let's go ahead and offer out, right, and try to, as we start to retrace this red bar. Okay, so we got out 21.20. It said in the chat, go ahead, offer out, came back up, took it out by a little bit, and then started to come back in. Now this is not an easy spot. Now it's great that we got this nice entry and we immediately got nice follow through. But what that also means is that we don't have any good place to trail. Right, now this kind of held as support as a reaction to this red bar, but I wouldn't make too much of it. Okay, I mean, you could have used that as a trail, right? Otherwise, we're going to have to leave it at our stop, right? So we got most of the way to our target. We want to get tight. We want to look for an opportunity to start taking profit, right? When we're in here, we're only halfway there. Don't want to do anything. Don't want to mess with it, right? When it's either just triggering or halfway to target. Now when we get close to target, that's when you want to start locking in, right? So we took half, and now we want to see how we're going to manage the back half. Got a retest, right? That's not a very bullish looking bar either. Okay, and then we come in and we get this bounce here. Okay, now if I don't trail it here as a reaction to the 2-minute 20 MA, not that these lines have to be anything special, but, and I know that the 5 at the time, nowhere near, okay, when we're right here, nowhere near, I'm not going to get any support, right? And the reason I might get some support is because other traders are looking at it. Other traders who like to buy off the 20 MA, off a rising 20 MA, right, may come in to support it. All I need is for other buyers to be interested or to take action, right? And that'll be enough to get a bounce, right? So that's the reason for the trail there. As we start to come in to and we trail it back after 2075. Okay, we get this right here, and unfortunately it did trail. Would have been nice to see it bounce back up. Okay, but that's what we decided to do. I thought we captured a nice amount on the front half, and I didn't want to see the back half go negative. Okay, so, and there was just nowhere else to trail. Otherwise, we let it stop out, and that's what would have happened. Now, what if you don't have a target? What if you say, I get in it, and I'll come back to it at the end of the day? Just not look at it. Sometimes you may have something that ends up at the highs, right? And then in this case, yeah, you would have, well, if you say you only had a stop, no target, you'd see this swing all the way back and stop you out, right? If you didn't have a stop, right, then I guess in this case you'd probably be just okay, down a little bit, wouldn't be a disaster. And like I said in the last video, like, if you don't have a stop, most of them won't turn into a disaster, but this is going to be very distracting, having this go all the way back, right? So all these things are important. Entry, to let you know when the timing is. When should I commit my money, my precious capital, to a position and expect follow through? Why should I have a stop? We addressed that a little bit in the last one, but I think that is of the utmost importance. And why do we need to have some kind of target? Right, in this case, didn't get all the way to target, but that's pretty close. So I've gotten that question before too, right? How close to target before I start to take some? I say 80%, but the point is, once it's most of the way there, right? When we're beyond the entry, when we're part of the way there, halfway there, right? Don't mess with it. A lot of times you'll get yourself shaken out before it actually gets there. When the money is there, right? That unrealized profit is there, that's when you want to start taking some. Not when it's just up a little bit, small amount, right? And then there's really, we're just worried about not losing. It's when the money is there on the table. Okay, now we need to start to be a little bit more protective. All right. So even though in the last video, you know, I put up that 99%, even if you're 99% sure that this is going to go higher at least 1 cent from your entry for the rest of all time. I just pick that number because it's very rare that you buy a price, say you're going long, you buy a price, and it only goes straight down from there. And for the rest of all time, it never comes back to that price or above that price, right? It's pretty rare. But let's just say, you know, that number itself is not what's important. Important is now all these components, these restrictions that you put on it, I needed to get to high of the day or close to high of the day, right? I needed to trigger first. I needed to not take out the stop. Reduces the chance that you're right, that you get to be right and say, of course you come back days later, I'm sure, on this REGI and find it at an even higher price, high of the day. Maybe, maybe not. But it's just what we have to do in order to maintain our accuracy. So I hope it wasn't misunderstood by having that percent 99% higher for anyone to think that I'm saying I'm right 99% of the time. Far from it. I told you what the number was. For all of the 2017 trades, 54% win rate. And when I looked at the numbers for the first half of 2018, it's only 2% higher. So would I like that number to be higher? Am I always striving to be more accurate? Yeah, of course. So I'm almost consistent to a point where I would like to not be that consistent, but I'm okay with it too. I'm not discouraged by it. I think we're moving in the right direction. Sharpe ratio also moved up about 0.03. So not a big difference, but still moving in the right direction. Okay, so just wanted to point out why each of these components are necessary, why this structure is necessary. Right? If we don't have an entry, how do we know when to initiate our position? We can have a bias, and that bias can be established even before the market opens, which you almost need to be if you're going to trade the open. But how do we know when it's time to get in, when it's time to stand aside or wait for the setup, right? Which you'll hear a lot from us as we kind of wait for the setup, look for the setup. That way we have our stop, our target, our entry, and it all makes sense. Okay, why we need to have a stop, pretty self-explanatory at this point, and then why we need to have a target, right? Otherwise, you're just kind of watching the money flow back and forth across your account without any real expectation, right? Okay, so I just wanted to elaborate on the last one. I think maybe you could have done a better job perhaps explaining how these components work against your probability, but in this video I really wanted to point out why they're just absolutely necessary. Okay, you can run into situations where targets can be determined if you're at all-time highs, right? If you say your all-time highs, all-time lows, or into really big void areas where maybe it's not realistic that it reaches a support or resistance level. What can you do in those situations where the target's not clear? You can use reversal times. You can use an arbitrary R amount. Say I'm just going to take it all at 2 Rs. Or you can plan to trail. Have a management in place. I'm either going to trail 5-minute pivots, or after I reach 1.5 R, I'm going to trail 2-minute bar by bar. Right? That's fine too. There will be times where it's all-time highs, all-time lows, and there is no other reference point, in which case targets are going to be a bit nebulous, but you have to have a plan. Okay, so that's probably the only component that's a little bit more flexible out of the three: the entry, the stop, the target being the most flexible. Okay, so hopefully that gave a little bit more clarity on these three components, why they're necessary, even if they can work against us sometimes. Okay, and that's just a couple more examples of what you'll see in the black room. Alright, in yesterday's video showed you trade that stopped out, just complete 1 hour loss, and one that was good and then the runner trailed out break even. In this case we got close to a target 1 and then trailed the back half for a small gain, and then the one before the EXPD just didn't even trigger, which you'll see as well. So I think that runs the full gamut of what you can expect in the black room, right? And a pretty good representation of how our trading goes. Okay, so hopefully you found that useful. If this fits the type of trading that you either like to learn more about or the type of trading that you're already doing, then we do have a open house for the next 3 days. Okay, so hopefully you'll come join us, and I'll see you in the black room.